Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. So today is Thursday, an update on this picture of the S&P 500. We are basically, guys, churning at the highs, okay? Churning at the highs, working off some conditions here. I'm getting a little bit weird. I'll tell you guys why. Okay, we'll get into the churning at the highs and what I see going forward. But first, of course, let's talk about the technical picture, okay? This is bullish. The technical picture is bullish. The moving averages, again, we're still above the 10, which is above the 20, which is above the 50, 100, 200. They're all stacking up perfectly, okay? So the technical picture is bullish, but the sentiment is what worries me, okay, here. The fear and greed index, yesterday we were at 61, we dropped to 59. It's going down as the market goes up today. Very, very strange. Usually it goes up. Okay, it's positively correlated, not this time. Probably because a lot of the sentiment indicators here, we still have extreme greed because nothing has changed in the stock price, but we have fear and extreme fear in the stock price breadth, okay, which could be an opportunity going forward. The put call ratio is still fairly high, okay. That's why I'm still weird about the put call ratio. People are still buying calls. There is fear here, but this is a good thing, okay. So we're having a lot of sentiment is expecting a down move, okay. Despite the positive look here, nobody trusts this bull market still, okay. And we see the market going up and people not liking it. We see the overall sentiment going down, okay. So that's a key. It's telling you that there's something. People are still negative. People are still bearish. Okay. And speaking of bears and sentiment, today is Thursday. Okay, Thursday the 21st. Forgot to mention that. But we get the AAII Investor Sentiment Survey, which I like. And just like I suspected, okay, the bears are coming back. You have one. Look at that, 43.6% bearish and back down to nothing. Below average bulls, okay? Nobody likes this market. And why we said that? We said that here, there's too many bears sticking around. Once we get a down move, and we got a small down move here, 1% to, what is it, maximum 3%. And the bears are back out massively, 43%. They're still lingering. I mean, this bodes well for us. I mean, we're bulls, okay? So I think any down move, especially since we got the sentiment almost at neutral, any down move, any small down move here, maybe covering this gap here. I would love to see the cover of the gap at 722 here. This must be covered. We'll get these guys another bullish, a bearish attack coming, next week if we start going down. This will get into the neutral and fear almost immediately, right at 720 on the SPY. So this is good for the bulls longer term, okay? But I'm very, very suspect as it's going up. They're piling into the calls, but the sentiment is negative overall. It's very, very strange. I mean, I like it, the fact that there's still a lot of bears out there, which is good for a bullish thesis. So, but shorter term, I think it might go down, cover this gap, and hopefully go even lower. Sorry. Okay. So this is what I think will happen going forward. I don't know. But this is why we are positioned net long with some short exposure. I just don't like this here, this choppiness here. I love this. They're still there. The bears are still there. Everybody's still negative. And that's why I like it. Medium to longer term. But we might have to correct first. We barely had any bulls. It'll destroy the bulls. It's crazy that nobody's bullish at these highs, okay? So that's it. That's for the sentiment. I suspect it goes down shortly. It doesn't have to, okay? We can get some good war news and go right back up, but then that'll exacerbate. Who knows? We have no idea. I'll see how things go after that. But so far, if nothing happens, I expect a little down move before we go back up again, okay? And we did have some macro. Today, we have, of course, the initial claims. We always get that. Anemic, 209,000. Last week was 212,000. Before that, 199,000. It's still anemic. Small, nothing happened. Everybody's still, they're worried at the top and nobody's filing for unemployment. So all of the stuff is doing good, okay? I'm talking about the stuff, the macro stuff. Nothing is broken down yet, okay? So let's get to the churning at highs and what that means, okay? We mentioned before the churning and the sentiment and how people are still bearish at the highs, but we have a lot of markets that are showing some kind of fatigue, okay? First of all, it has to do with a war, zero hedge. It's everything about the war. There was supposed to be a peace deal, but look, no deal reached amid fabricated Mideast media reports as Trump presses nuclear issue and says they won't back down, okay? So let's revisit some of the things, guys. Some of the asset classes. Oil, we said it's going to chop around, even though today was a good, if you're short, okay? It was a down day because the deal might get made, who knows? It's still around the $100 level. Everything, it's a magnet. Unless a deal happens, it'll stay there. We shouldn't be repeating that, okay? What really worries us is yields, okay? The US 10-year. I mean, it's based on oil. We have to look at oil first because this is what's driving the yields. But look, today yield went down on the US 10-year. We hit these maximum red lines and it's going down. However, if you look at the FedWatch tool, this is the FedWatch tool for all of 2026, December 9th, 2026. This creeped up again. It was in the 38. Now it's back to 40. It's competing. This meaning one rate hike for 2026. 2 rate hikes are coming up, popping up for 2026. And no hike, 44%. It's a battle. It's a battle. They're all telling you the same thing. Okay. So we have yields here coming sort of down. We don't know. It's just a nice 2-day relief. The pressure's still on. Okay. This means nothing. This down move means nothing. Trump is still on the clock. Okay. They're all saying the same thing. We're all churning at the highs because of that. And people, because of the fear, are positioned, are not believing this bull market. They don't think it's going to happen. Okay. They really need some concrete proof. Nothing's going to happen unless there's a real concrete deal, like we saw with zero hedge. You're going to get these reports that an Al Arabiya network, media outlets attribute the news to Al Arabiya without verification is a professional error. So they said that there's going to be a deal. A deal was reached. If you go back down, that a deal was sort of reached, except, and they have the final framework and they're going to announce it, but they might not be good on the nuclear issue. So the market, went up and then back down when it wasn't confirmed. You're going to keep getting these back and forth type of moves, and it's all affecting the churning at the top. Okay, that's why people are still worried. They don't know, but I think like people are way too scared for what we're seeing here. Way too scared. They're basically ignoring the market and thinking that it's overbought or whatever. Okay, and the breadth is whatever low. It's not going to work. Okay, and the other thing that bothers me is like, remember, we had the market, but we also had NVDA earnings. Okay, and they were very good. Okay, you can see here the NVIDIA earnings, they beat by 6.52% and revenues beat by 3%. So it's doing well. But look at the reaction. Remember, we said yesterday that it was, fairly up, flattish. But now what happens the next day? Okay, it's down 1.77%. So basically the news, the ramp up before the earnings was, already, the move was already discounted. Okay, the move was already discounted and basically it's flat after that. It needs something else to keep going higher. Okay, and an offshoot of that is the semiconductors. To me, it looks like they're churning at the highs, waiting for a move. I mean, the longer it stays here, it's very, very good. But I suspect it does like the SPY and goes down a bit after. Okay, covers this gap at 521 on the SMH. So this is what worries me. Okay, this is why I think this might be some kind of a corrective move first. Just like with the SPY, it's almost the same story. Okay, we have the SPY here. I'm expecting a corrective move. It doesn't have to happen. If they announce some kind of peace and a long-lasting peace, we're going here to 760, maybe 780. Who knows? You have no idea. You have to look how things go, and then maybe we might get some extreme greed and some bears dead for like a month or two. Okay, we could, if some deal happens, we could have June being the bottom. Okay, bottom of the fear in the market and the beginning of the extreme greed with more breadth, more strength, etc. It could be like the erasure of the fear that we see that keeps these bears lingering and waiting to pounce at every small down move. Okay, when that happens, then we know people are all in. It has not happened yet. Okay, this is why I'm comfortable being a bull with small short exposure based on what we see here. And even if the short exposure doesn't happen and the market goes up, we're good. Okay, you want to be net long is what I'm trying to say in this market. Okay, don't get fooled by any of these headlines. Look forward. Okay, the market is telling you that there's going to be some kind of deal making. Okay, that's what we're turning at highs and we have fear. Love it. Love that as a bull. Okay. And with it's still, I'm going to say it again. The yields matter. Okay. The market here is saying that the stock market is saying that we're going to go through the war, but the bond market is saying no, we're still worried about inflation and the war. Okay. But you see, these things change very, very fast. Okay. You have to look forward. This is the now situation. Now people expect a rate hike. Okay, imagine it doesn't happen. If they're positioned for a rate hike and it doesn't happen, you're going to get that move where this is a high tight flag and boom, market rips even higher. Another 5 to 10%, 5 to 7% move to the upside. It's going to be crazy. Okay, because if everybody's wrong, all of these moves have to be unwound. Okay, especially since we're approaching the red line on US 10 year. Once it hits that, look, on the US 10 year. Okay, once it hits, US 10-year yield we're looking at. Yeah. Once it hits these levels like 5.7 after a big move and there's a reversal, the reason for this big move is off the table. We're going back below 4. Okay, might even go to 350. We might have some kind of breakout move on the SPY and the market. Okay, so remember, everybody now is positioning for hell. Okay, bad war move, war bad. Okay, inflation bad. It can get unwound very, very fast. Just be wary. Okay. And stay with what you have. Stay the course. Okay, nothing has changed yet. All right. So let's see what happens tomorrow. Maybe a deal gets made. Maybe it doesn't. We'll see. All right. Later, guys.